Hi, I am Anna. I come from www.ntvforex.com. Sentiment buoyed by Phase 1 trade review talks on hold as USD begins to slip again. Video analysis http ntvforex.com news ID EB15E48172020 11:57:32 am Market overview. There is a sense that a consolidation that has run through the weekend is still broadly present across major markets today. However, this comes with a slight renewal of USD weakening too. There has been a mild sense of relief that a 6-month review of the US-China Phase 1 trade agreement progress has been postponed, with some reports suggesting it is to give the Chinese more time to increase US imports. This delay to the US-China trade review is a release of a degree of risk in trade tensions, and should help to support risk appetite early this week. The dollar-yuan rate is testing recent lows again, often a barometer of risk sentiment. The nascent dollar rebound, which had threatened into the middle of last week, is now tailing off once more, and consolidation ranges are forming across major forex. Despite this, the big moves seen in US bond markets and precious metals are moderating now. Adding into the mix of conflicting news flow today is the announcement that Japanese growth came in slightly worse than expected. The New York Fed manufacturing data could shape sentiment this afternoon, but focus will already be turning towards the Fed minutes on Wednesday. Wall Street closed mixed into the weekend, with the S&P 500 losing 1 tick to 3,373. However, futures are higher this morning. E-mini S&P 0.3%. Asian markets were mixed overnight, with the Nikkei 0.8% in the wake of the GDP miss, whilst the Shanghai Composite was 2.1%. In European markets, the outlook seems to be more cautious, with mild early weakness on FTSE futures 0.1% and DAX futures 0.2%. In Forex, the USD negative bias is coming through the major pairs, with only really NZD not feeling the mild benefit. In commodities, the precious metals of gold and silver are running higher along the lines of dollar weakness, whilst oil is between 0.5% and 1% higher. It is a quiet European morning on the economic calendar, so we look ahead to the US session. The New York FTSE Empire State Manufacturing is at 1330 BST and is expected to show the recovery of the past few months, just rolling over slightly in August with a drop back to 15.0 from 17.2 in July. NBSP chart of the day. AUD. We continue to see a broadly improving outlook developing on Euro-Aussie, although a decisive break higher is yet to be seen. Breaching the last of the multi-month downtrends, the pair has been steadily building a floor of support in recent weeks. This includes a pivot of support between 1.6350–1.6400, which is a higher band of support above the key floor 1.6030–1.6100. The market is close to forming a base pattern now. As the momentum indicators remain in their improving configuration, the potential for a breakout above 1.6585 is growing. If seen, this would be a key change in sentiment towards a more bullish euro positioning. The RSI has been holding above 50 for the past few weeks, stochastics are also consistently positively configured, and MACD lines are above neutral. It points towards weakness being bought into, and anything towards 1.6350–1.6400 is seen as an opportunity to buy. The market seems to be positioning for a test of 1.6850 initially, but a close above 1.6585 would be a 2-month high and complete a base pattern that would imply 550 pips of additional recovery in the coming weeks. Although the market is still stuck in this consolidation, it certainly seems that there is something of a recovery developing. Initial support 1.6460. NBSP Brent crude oil continues to consolidate. Although there is still an underlying bias to support weakness in Brent crude, managing to drive the market higher is a different matter. The latest support has formed between $44.25 $44.50 in the past week and a half, but once more it is still a market that lacks the drive to pull prices decisively higher and generate positive traction. Despite this, there is still a run of higher lows intact, where $41.30 is still the first important support. With a broad positive bias of momentum, we still see near-term corrective moves being bought into for what is still favored to be an eventual positive breakout. Resistance at $45.80, $46.25 is likely to be breached at some point, but we are not expecting a huge run higher on a breakout. The next real medium to longer term resistance is $53.10, $53.80. NBSP Dow Jones Industrial Average. The rally on the Dow has lost impetus in the past few sessions and a drift consolidation has set in. At this stage, it seems to be little more than a pause for breath, and the driving force that pulled the market through the key June resistance of 27,580 is still a factor. There is a band of breakout support between 27,580 to 27,625 which is still housing good underlying demand were there to be a near-term slip back. Momentum remains positive, but is slightly stretched, with the RSI in the high 60s. As yet there are few corrective signals, and even today the hourly chart shows there has been a degree of unwinding during this short consolidation. A move through 28,044 would open the rebound high of 28,140 again, whilst the old February bear gap at 28,400-28,890 would become the next key test. NBSP. Read more analysis here. Euro USD, GBP USD, USD JPY, Gold. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.